In this presentation, we will take a look at an example problem related to supplies inventory for the government-wide type activities. This will be more familiar because it's going to be more normal to normal accrual accounting. Therefore, we'll go through it a little bit faster, but we want to be able to compare and contrast the normal accrual that will be used in the government-wide activities to the consumption method, purchases method that could be used in the modified accrual activities for some of the funds, including the governmental type of funds. We also want to emphasize the comparing and contrasting to the government-wide activities, which are on the accrual basis, versus the fund accounting for the governmental funds that are going to be on that modified accrual basis. Here we have our information on the left. First item is the supplies are ordered at estimated cost. So we can imagine this being the point where we have an estimate and we sent out the purchase order. Like with for-profit accounting, the government-wide accounting or on accrual basis type of accounting doesn't record anything there because, of course, we haven't received the inventory and we have not yet paid for anything. Therefore, no financial transaction has happened. Something like encumbrances would then be recorded for the modified accrual, but on the government-wide level, we don't have that because we're on the accrual basis. Then we have the items where the supplies are received at the actual cost. So now we have the supplies. We're going to record them. We're going to record them for the actual costs. We don't need to deal with the estimate. Now, this, of course, doesn't mean that in practice, in a for-profit or for the government-wide, the invoice still went out. But, of course, we don't record the invoice, and we wouldn't do so for for-profit in the prior slide. Now, here we're going to say that we have received the item. So we've received the supplies at this point in time. And we're going to record it in accordance with a normal type of accrual basis. In other words, instead of recording the expense at this time, we're going to record it as a type of inventory, kind of like we would if we were buying and selling inventory for a for-profit. So we're going to have our beginning inventory plus purchases minus ending inventory. That's going to give us our calculation of the expenses. So now we're going to say that the inventory supplies is going to go up. That will be an asset type of account. We're going to say that we paid cash for it. Therefore, cash is going to be the other side. So we're going to say inventory is going up, asset type of account, cash, then going down. Then we're going to imagine now it's at the end of the years and we've counted the supplies, what are the supplies left, and we're going to record the supplies in accordance with like a periodic type system. We have the beginning inventory, then we have these purchases of the 851.5. That's what's left here now, 851.5. Then we counted it at the end of the time period. We're left with 77.1. So we'll subtract that 771. That's what we have left. So we have consumed under an accrual basis, therefore the expenses being 774,400. So that's going to be our transaction. And again, of course, it could be the fact that we didn't consume some of the could have got lost or something like that happened, but we're assuming that the difference between the beginning inventory plus what we purchased minus ending inventory is what we have consumed. We would then record this on an accrual basis, increasing the expense for that amount that we would have consumed and decreasing the inventory supplies. And that brings us down to the physical count of 77,100. Note what's not happening here. We're not having any kind of funny business going on with what would be kind of like the equity section, the net position section. We're not trying to say, hey, this is assigned, this is unassigned, this is non-spendable, kind of things like that within the equity section because we're in the government-wide accrual type of accounting. Next thing we're going to do is the closing entry. So in the closing entry, all we have right now are expenses, that being the temporary account. We're going to close them out to what would be similar to the equity type of accounts in a similar fashion as we would with a for-profit organization. We're going to say this is what's in the expense. I need it to go down. We're going to do the opposite thing to it, a credit, put the other side to what would be the equity, in this case, the net position. So we're going to say the net position is going to be debited, expenses being credited. That brings the expenses down to zero, and it puts the difference in the net position as we would expect with a normal kind of closing entry type of process. We now have our post-closing trial balance, and that's going to be our beginning point when we go to the next time period. So if we go to year 2 then, now we're going to say same process, different numbers. The first item is something that we're not recording because it's an encumbrance. So this one we're not recording with regards to the government-wide activity. The second item means we got the supplies. Same process. We're going to debit the inventory of supplies, and then we're going to credit cash. So this time, only thing different, we already had something in the supplies inventory because that we had an ending balance last time. And so we're going to have the ending balance, or now the beginning balance. plus the purchases gives us the amount that we had available, to use. And then, of course, we're going to count it next time. So this increased the supplies and it decreased the cash. Nothing happened to the income statement accounts. Then at the end of the time period, we're going to say, hey, there's 60,000 left. Therefore, we're going to subtract this out. How do we know there's 60,000? We do a physical count and say there's 953,500. That's going to be the beginning balances plus the purchase minus what's left, 60,000. We assume we used then 893,500 on like a periodic type of basis system, inventory system. So we're going to debit the expenses for that 893.5 and credit the inventory. So we debit the expenses, we credit the inventory, leaving us with inventory that is equivalent to the physical count. So this should be a normal kind of process, look basically familiar type of accrual process. And again, the thing that we're not doing is doing anything weird to specifically the equity section until we do the normal kind of closing process where we're going to close out the expenses. In this case, all we're left with are the expenses because that's what we're focusing in on it. We're going to close it out with a credit of exactly what is in there, close it to the what would be equivalent to the equity section or the net position section. And that means it's going to go down here and go into the net position section. We still see that the assets minus the liabilities are going to equal that net position section. But what we're not trying to do, as we would on the modified accrual, is break out that net position and into different types of levels of restriction, as is one of our major goals in both the consumption method and purchases method, ending at that end goal for the fund accounting.